Let's dive a little bit deeper into the market action at the close. Abigail, what were you watching?
Well, Caroline, with today's big rally for stocks, it wasn't just Haven bonds that were being sold. It was also the precious metals. Check out gold and silver. Gold down 2.2%, silver down 4.9%. The worst day for these precious metals going back to 2016, similar to bonds. What makes this so interesting, the dollar index, or the Bloomberg dollar index, flat. So that was not a pressure at all. Investors just want out of these Haven assets that have been bid up so much on the year. And that's not entirely surprising. When we take a look at this gold chart that goes back over the last 5 years, we see gold stuck in this huge range between, let's call it 1,200 and 1,400 this year, making a huge move above it, well extended above that 200-day moving average. The RSI, or momentum indicator, putting in a series of lower highs, suggesting that we could see some serious consolidation ahead for gold. This will be an interesting one to watch for sure, Luke.
Thanks, Abigail. And, if not for treasuries, the real huge story of the day would be the fact that we now have a record week for high-grade issuance, that hitting $74 billion now. And I'd like to take a look at, we have the yield curve. We've talked about tens, twos, inversions, the extent to which that's a potential recession indicator. That's more of a Fed forecaster. Let's look at spread curves. So this is the 10-year triple B spread, less the 2-year triple B spread. So kind of a gauge of the riskiness and the time component among the companies that are just kind of clinging to investment grade rating. What you see here is, while that is steeply negative there in 2009, right here, steepening a bit recently, it's still nowhere even near late 2010 when we were kind of having double dip recession type worries in the U.S. So this is another reminder that companies are issuing not because they have to, but because they can. New issue concessions pretty light, Scarlett, and the market seems that this is fuel for risk assets broadly. All of these debt issuances to help propel buybacks, help propel the market higher.